Welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Jesse Futia. Jesse is a U.S. Army Ranger, currently stationed in Georgia. He was deployed in 2020 in the Middle East in the spring of 2020. And he started investing when he was only 20 years old. This is unbelievable. And he started in what he knew best at the time, which was student housing, because he was still in college. He scaled that to 8 total properties with student housing. And now he's kind of diving into commercial real estate. Jesse, welcome to the show.
Yeah, Eric, thanks for having me. I'm a huge fan of the show. I know a bunch of people that you've had on, and I love what you do for the listeners here. So it's cool to when you're a huge fan of the show, it's awesome to come on and to be a guest, because it's like it's almost like a dream come true. But I appreciate everything you do, Eric, for all your listeners and all the value you add. So it's a pleasure to be here today for us to chat.
Well, thank you, Jesse. I really appreciate that. And 25 years old now. This is an incredible journey already. So how did you get started? How did that whole happen?
Yeah, absolutely. And you already touched on it a little bit in the intro, but to kind of deep dive it a little more, I'm born and raised in upstate New York, like you mentioned. I went to college up there to SUNY Albany in Albany, New York, just a state school. So when I was getting ready to move off campus, I was probably about 19 or 20 years old, and just starting to look at the market and stuff like that. How should I rent? Stuff like that. And I was just coming across unfortunately, so many slumlords or landlord. Maybe that's a derogatory term, but landlords who unfortunately don't take great care of their properties and rip money from the properties, rip their students' security deposits for, simple little things like breaking the blinds or stuff like that. And just, it was unfortunate to see the state of the real estate market there in Albany. And I was like, man, I think I can do this better than by renting to some of these guys. So immediately I pitched my father, who's an accredited investor. I pitched a couple of my buddies, and I thought about, what if we could buy a duplex, college house, but, we can rent it by the bedroom to kind of maximize our NOI. So even though it is, in the property with 4 walls, it is a duplex. It almost like it rents as an 8-unit apartment building, because we're able to rent that by the bedroom to each student to kind of maximize our NOI. Because obviously nobody's related in student housing, most likely. So we kind of utilize that to maximize our NOI. But yeah, what really started as kind of like just a good idea, like, hey, I think we can do this better, 5 years ago, has grown into now an 8 property portfolio where, we've never been at anything less than 100% occupancy. We've never had any issues with anybody paying or anything like that. And I think that really kind of speaks to the level of product that we provide the consumer. We do a lot of value add stuff. We take great care of these properties. We put money back into them. We build great relationships with the students. We have a great relationship with the university. When the university gets calls on like, hey, do you guys have any connections with, off-campus housing? We're the first recommendation that the university is giving to parents and students out there. So it speaks to the level of occupancy. It speaks to the level of, product that we provide. And yeah, it's been super thrilling. It's cool to kind of grow that portfolio, with my father. He's been a huge influence in my life, and to have that opportunity has been incredible. And obviously, to be kind of like a mini entrepreneur here on the side while being full-time in the military has been an incredible experience. So, but yeah, that's kind of a little bit how I got started. And yeah, student housing is great. It's super underrated. The education system and the demand for real estate that goes into that, especially from a housing point of view. I think some people tend to cringe, especially when you look at the last 12 months of the market. Colleges going remote due to COVID. I think people might cringe when they hear student housing, but and for sure,
but it's coming back. I think you're right.
Yeah. And a little bit there. Our hearts dropped too in March of 2020. College is going remote, but and I'm not going to speak for everybody out there. I can only speak for my personal tenant base, but I would say the majority of people, when it does come to student housing, at least for my tenant base, the majority, their rent is paid by their mother and father. It's not necessarily the student themselves that's paying the rent. So it's an interesting dynamic that I think, again, even through COVID, we had no issues with collections or anything like that, which again, I think it speaks to the product that we provide. We're drawing that high quality tenant, but also it's kind of an added bonus with student housing where it's not solely based on the tenant to get the rent or to collect it. So no, that's a little bit how I kind of got started though.
So let me, I mean, I've never done like student housing. We did look at some projects in the past, and most of our listeners, I don't think they're really in the student housing space. And I think this is a little bit different than a typical rental. So tell us a little bit kind of like how these metrics kind of work out in terms of if you have a duplex, for example, and then you're renting by the room. What's your average return, for example, on return on equity or cash on cash return after you finance a property? If you buy something like that, what can our listeners expect in terms of that?
Yeah, no, it's a great question. And to kind of give you guys an idea of the numbers that we're looking at, I mean, we've gotten, and again, we started 5 years ago when fortunately the market was a lot less hot and prices were a lot lower than they are currently. But I mean, when we're purchasing these duplexes, a great example, we acquired a duplex who I think, again, was the current owner was renting to families. So one family on one side, one family on the other, and they were getting about $1,000 a month
per unit or for both units?
Per unit, so 2,000 together in the house. So an important thing that we look at when we're acquiring these properties, and again, we want to put students in these properties to maximize our NOI. Our business model isn't going to work. Our IRR, our return on equity is not going to work if we don't get students in there. So again, to give you that idea, it's always a stipulation with what current leases are in place, how the current owner is operating it. Can we reserve the right to not honor those leases or what exactly goes into that? But again, that particular example, the current owner was getting $1,000 per unit, so $2,000 a month. So he was grossing right around $24,000 a year. We were able to put students in there the following year, and we were renting it at about $500 a bedroom. So 4 bedrooms, 2,000 on one side of the duplex, 2,000 on the other, for a total of 8,000.
So you went from 2,000 to 4,000.
4,000. Sorry, I'm doing the math in my head.
It's okay.
But
wow, this is amazing. Double the gross revenue. This is absolutely phenomenal.
Yeah, and a lot of the stuff we do, and I really love the acquisition side, and we can talk about this too a little bit later with the commercial and how I've kind of worked into that. But a lot of the stuff we do is direct to seller. Back in college, simple as knocking on doors and finding out who owns this house right here, or cold calling, direct mailing, stuff like that. But I would say almost all the deals that we've sourced have been strictly off market, direct to seller, which has given us that opportunity of there are families in here currently. Hey, this is a perfect house that we could put students in. We can fix it up a little bit. We can aesthetically make it look a little more appealing to a younger generation or whatever, fill in the blank. And just like that, we're able to, in that particular case, double our gross revenue on day one, just like that.
When we talk about highest and best use, I mean, this is very significant increase in revenue. So is there any more but when the students go home in the summer and stuff like that, is that still generating income during that time? Or so is it rented only for the school year, or is it rented year round?
Within our market in upstate New York, and another great question, it's rented for 12 months a year. So students will sign and whatever, I'm just an example, seniors will graduate in May of 2021, and June 1st of 2021, we'll have another 12-month lease already set up to rent. So even though students aren't living there necessarily during the summer, we're still collecting rent, and we also utilize that time to update units, etc., fix any problems that might have occurred during the year.
What about property management? Are you doing your own property management, or do you have a company that does that?
Yeah, and another great question. My father executes. My father and my brothers really execute all property management. We
Okay.
hold it all in house, so our portfolio is really confined to what I would describe as like a 1 mile radius. All
Okay.
8 properties. So it really creates some redundancy where, hey, we can shoot over here, we can shoot over here, we can shoot over here. It's literally a second's drive from each other.
Okay.
We knew exactly the target streets that we wanted to target. Again, I was already in college. I knew where college students wanted to live. I knew the
Yeah.
houses. So the target market was that much easier. Hey, we know
Yeah.
we want houses on this street. It's going to make it that much easier to manage in-house.
Yeah.
But yeah, all management's in-house. We don't shell anything out. We kind of cut our expenses that way, even though it is a little time consuming. So
Yeah. Because a lot of our investors, they actually are invest out of state. I mean, most of the people that
Sure.
we are dealing with, they're on the New York area, or they're on the West Coast, which is kind of like very expensive. So investing in California doesn't really make a lot of sense if you're looking for cash flow. So they invest with us out of state in Memphis and Cleveland and all that. And I would suspect that for student housing, if they were interested in investing in student housing, they would want to have property management in place so that they completely hand off for that. Do you know if there's any property management companies that would be able to handle these student housing?
Yeah, I wouldn't say I'm necessarily connected with any or many in my network. I mean, I'm sure you'll agree that there's, especially in something like student housing where, there are broken windows and holes ending up in the walls. Unfortunately, no one's going to care more about that property than you are as the property owner. And just where we're consolidated all on one street like that, it just makes more sense for us to do it ourselves. And that way we know it's going to be done right.
Any issues with lending and stuff like that, getting kind of loan from from banks, or because it's student housing, is it more difficult? Do you have to anything special that we need to know about the lending part of it?
Not necessarily in my point of view. Lending hasn't been an issue because, again, like when we're approaching banks, we're taking it from this family operated duplex into this student operated duplex where we believe we're going to be able to 2x our gross revenue. It just builds more confidence with banks with being able to cover our debt service. With us particularly, no issues. And I wouldn't know as a whole as an industry when it comes to larger, commercial student housing and what goes into that. But I mean, student housing as a whole, I mean, at the end of the day, there's always going to be education centers. There's always going to be colleges.
For sure.
There will always be students and stuff like that. So I wouldn't know as a whole when it comes to the commercial side of student housing, but us in particular, I mean, we're always painting that picture where, hey, we're gonna increase our revenue. We're gonna cut our expenses, fill in the blank, and we've never had an issue getting lending or anything like that.
Oh, that's very good. So I think that's fantastic. I mean, I always like that. I mean, you buy a house, a duplex or a fourplex, and then you can double the revenue. I mean, there's nothing better than that, is there?
No brainer.
And then you're wondering, why did the previous owner, why didn't they do that in the first place? But so that's fantastic. So I really like that. And now so based on your success and all of that, you decided to kind of like go and more into the commercial real estate. So what were you thinking? Why were you thinking that it was important to go in commercial real estate? And what made you decide to go in commercial real estate?
Yeah, absolutely. Kind of the bridge probably occurred, I'd probably say about 6 months ago, right at the end of 2020. I love real estate. It's a passion. I want to say it's a hobby because it makes money, and I would say it's more of a passion. It's more of an obsession. I love it, and it's something I want to do for the rest of my life. And when I was looking at our current portfolio, and it comes back to us managing in-house and what that looks like, I was like, man, this isn't super scalable what we're doing right now. We're fixing broken windows, we're fixing smashed light bulbs, fill in the blank, man. I want something that's scalable. Something larger than that duplex where, even if a student moves out for a semester, we have 7 other people in there, but it's not like if one of 100 people move out and now you have 99 other people in there, you still assume more risk with smaller assets. So really it was really just that thought of like, hey, 5 years ago, I jumped into this, let's jump into this and see where it can go from the commercial side. And
Mhm.
to say the least, 6 months ago, I didn't know what a cap rate was, Eric.
Oh
Do you
yeah.
still want me to finish the show? Eric, do you
Oh
still want
yeah.
to have
Oh yeah.
me
Oh
on?
yeah.
6 months ago, I
Many
didn't know what
people
a
don't know
cap rate
that yet.
was.
Yeah.
And just this week, we'll be going under contract with our first commercial property, a 141 lot
Nice.
mobile home park portfolio
Mm.
that again was sourced off market at a
Yeah.
phenomenal price point. So
Yeah.
yeah, but that was kind of like the bridge. It was like, hey,
Mm.
it's not scalable. What is scalable? It's larger
Yeah.
assets, and
Yeah.
stuff like that. But I can
Yeah,
kind of
that's
talk
true.
a little
Yeah.
bit about that.
Yeah, I mean, scalability, I think is important. I mean, because I think now you're really like a family business right now, right? Which is kind of like
Yeah,
same for me. It's a family business. I have my two sons that are in there. My wife is involved, and I mean, we are all full time in the business, and then we have other people that are working with us. And you're always trying to figure out, okay, well, how do I scale this, and how do I
yeah,
step back from this too, so that I don't have like a 90 hour week every week. So you have to figure out, hire the right people, and then being able to scale, to step back from your investment, so that you can do why you were doing this in the first place, which was a financial freedom. You didn't do that to
yeah,
get another job on top of that. So yeah, so that's interesting. So you look at it and you say, well, this is not very scalable. I already own the whole street. Then and then the management is a little bit tricky. So I need to find kind of what's the next step, what's another investment. And then you look at commercial real estate, 140 units. And that's because at that point you will have like property management that would
absolutely,
handle it and stuff like that. Yeah.
absolutely.
Okay. Your father does not want to fix anything anymore, and that's
we are
for
bullish on
140 units.
no, we will have an on-site management in place for this one. And that's a challenge that's facing me, man. We've never had to do that before. What
Yeah.
goes into screening the right on-site manager who's going to be there every day, who's going to be responsive, who's going to help our tenants and stuff like that. So that, that's a personal challenge as an entrepreneur that I'm facing right now.
Yeah.
And that's going to be a big deal here within the next 30 to 60 days during this inspection period is hammering that piece out. So I'm excited for it though. It's going to be a lot of fun.
And I think what's important. I mean, I see a lot of investors, they kind of like flip like strategy, like, a little too quickly. They kind of go and they do a couple of deals this way, and then they do a couple of wholesale, and then they do some flip, they do BRRRR strategy, then they're looking at commercial and all of that. And what I like about what you've done is that you really you had multiple units, you bought multiple units, and you managed them, and then you realize, you say, okay, well, if I keep going like this, this is not really scalable. Then at that point, this is great what you have, and you're gonna, you can hold on to it. But then you're thinking, I need to get something, I need to get a slightly different investment. And I think this is what's important. I mean, you have to go a little bit deep in order to figure out exactly kind of like, why is this strategy, why does it need to be tweaked, and what need to be tweaked? Is it the market that needs to be tweaked? Is it the amount of money you put in? Is it so really figuring that out. And in this particular case, I mean, you determined that it was really the type of investment that was that needed to be changed slightly, and then something that could afford more property management, so that you can really step back from that. So that, I think that's what I think is important, and I think people should take the time to go deep enough in order to figure out how they want to tweak their next strategy, and then they can move on to something else.
Yeah, I mean, I agree. And one last thing I kind of want to hit on, you already hit on it, was like the aspect of being able to step back is huge. Like you won't believe with the student housing, the amount of what I would refer to as a, 50 cents an hour task that we have to do. Fixing windows, I already hit on, painting walls and stuff like that. When you're able to scale those larger assets and you're able to go hands off because you have the property management in place, it now takes your attention away from those 10 cents an hour tasks. So
Yeah,
you can focus on the $1,000 an hour tasks
exactly.
and scaling to even bigger and even larger assets and more acquisitions and stuff like that. So that's the really exciting part
Yeah.
about all this. And I think it's going to be a huge change what we're going to see here in the next 12 months within
Hmm.
our portfolio. So it's exciting.
Yeah. Yeah. And a move to, you mentioned also like off market property. I mean, that's great to have that's great to be able to find properties off market, but there are also still a lot of properties out there. Like we buy a lot of our properties on MLS.
Okay.
We also started a wholesaling company last year called Rocket Offer, so we get some deals off of that, and and we also get like deals from our realtor friends that say the pocket deals and before they go and you know they, they're really lazy but they, but obviously everybody wants to make the easy thing, so they have a deal and they say, oh, this is something that Martel can they would be interested in that, and they know that if we like the deal we're just going to buy it right away. There's like, you don't have to go and enter it into MLS or anything like that, try to talk to other people. We're going to buy it, we're going to buy it cash, it's going to be quick. So
Awesome.
yeah, so we buy any kind of way that we can, MLS direct with Rocket Offer, wholesale, even wholesalers, other wholesalers, and realtors. So any way you can, this is
Yeah.
how you want to do it. And so the other thing that I want to touch on, so what brought you now to so this is also non-traditional. So you start from a non-traditional, the student housing,
Yeah.
and now you're going to another non-traditional
Sure.
kind of investment with mobile home park. So what made you decide to go to mobile home park instead of something a little bit more traditional maybe in the same area where you currently have your student housing? And so, yeah, tell us more about kind of like what made you decide to go to the mobile home park?
Yeah, great question. I think it all sums up, and I'm curious your thoughts on this too, Eric. I think it all sums up to, when everyone's looking left, I like to
Yeah.
look right and
Uh-huh.
find that opportunity. Everyone and their mother wants a 100-unit apartment building in America right now. It's not a secret. It's not a secret to what's going on out there, and in the
Mm-hmm.
amount of competitiveness. Really, I think compresses cap rates and drives up prices. So really, it's just it comes down to that mentality of like going to hunt where others don't hunt. Can we
Yeah.
find value? Can we find opportunity
Mm-hmm.
where others are not hunting? So same with that student housing. I mean, you said it right
Yeah.
off the rip. It's definitely non-traditional.
Mm-hmm.
And then with the mobile home parks, it's like, hey, same thing. Mobile home parks have a stigma attached to them.
Yeah.
People think of narcotics, violent crime, poor collections. And I'll be the
Yeah.
first one to tell you, I'm sure there are D and C class trailer parks that are out there that are like that. But I'll tell you, the one that we have under contract and our vision for this isn't what I would refer to as a trailer park. It's what I would refer to as a mobile home community.
Oh, yeah,
And
yeah,
that will
yeah.
be the
Yeah.
vision and just that slight change, that name,
Yeah.
hey, this isn't a trailer park. It's not a mobile home park. It's a mobile home community. It's
Yeah.
where families can live, prosper with a safe, clean, and secure place to live at an affordable rate.
Mm-hmm.
But that's really the basis of it. I'm curious from you. Any thoughts on the level of competition and multifamily and that concept of looking right when everybody else looks left? I mean, any
Yeah,
thoughts on
definitely.
that?
Yeah, definitely. So I always like to be the big fish in a small pond. So
Sure.
that's what I like. I think this is my money can speak a little. I can go faster. I can more cash and stuff like that. This is one of the reasons why we are in these markets like Memphis and Cleveland, because we can buy everything cash, we can pay everything cash.
Awesome.
That really accelerates how we go about doing business. If somebody doesn't have that kind of money and then they have to get a hard money lender for every house that they buy, well, they wouldn't be able to do 20 houses, buy
No.
20 houses in a month. So which is what we did last month. And
Nice.
because it's cash, boom, you just do it. And so that makes it a lot easier to do that. Small, and that translates also into apartments. So I stay away from actually the 100 units and above
Okay.
apartment building, because who buys that? These are professional real estate investors. These are, Wall Street companies and REITs that are buying these massive things. They are forced by their contract to invest in real estate in some types of real estate. So if they have cash on hand, they have to spend it within the period. And that means they're overpaying, in my opinion, for a lot of these properties. Right now, the stock market is full of cash, and so they just, that's why you're saying the cap rate compression. I mean, now it's like 4%,
Yeah, I know,
cap
it's
rate in
nuts.
many markets. I didn't even look at San Francisco, but like a few years ago, we were on a deal in San Francisco, and already the cap rate was like 4.5%. So I can
Jesus.
imagine what it's like now. It's probably like 3.5%.
Yeah, it's probably in the threes or something. Yeah.
So this is insane. I mean, it works great if you're planning to do a quick flip, because that's going to be a big multiplier if you do value add, or if you do like if you're able to do like a gross rent, like multiply the gross rent or the gross revenue by 2 times or 100%. So this is like, that would be fantastic, because then the value would be multiplied that much. But beside that, I think it's when getting in, this is going to be hurting you. It's getting that deal done at what you consider a reasonable price.
Yeah. I like too how you kind of hit on hunting in that 100 less or that 90 less door
Yeah,
pool.
we can
I mean,
normally go
I'm big on that
below
too.
50, below 50.
Nice.
That people are not too interested in that, and below 30, actually, you end up with people that the owner typically doesn't have professional property management.
I've seen that too. Yeah.
So they're self-manage, and they're tired of managing. Just they don't want to paint anymore, change light bulb, and fix toilet. So they're just like, okay, and they don't know any other way, or they want to retire or something like that. So yeah, so there's a lot of that. You're not going to find that in the 100 units and more.
Yeah, they need professional. Yeah, property management.
Yeah. But like a mobile home, this is a little bit unique. There's a lot of I know a few people that are in there, and they're very active investors in mobile home park. They love the mobile home park, and there's quite a few things that are unique about that. But I'm gonna let you talk about what is unique for people that have never invested in mobile home park. What is unique about mobile home park compared to having a 140 unit apartment building?
Yeah, the most unique kind of slam dunk part of mobile home parks is the concept of what's called land lease. So basically, the majority of these tenants own their own homes. And you, as the mobile home park owner, basically just own the dirt and the infrastructure beneath the dirt. So, example like electricity, water supply, sewer supply, stuff like that. So, basically, what you see here, and compared to multifamily apartment student housing, you see a very low expense ratio within mobile home parks, because you're not going there to fix broken roofs in the mobile homes, or smashed windows or broken toilets or anything like that. So really, it's based off of this concept of being land lease, where you're just owning the dirt, and whoever, Jane Doe and John Smith are paying you, based on market rate rent, $300, $400, $500, still below that apartment market rent, but still a pretty significantly good price. They're just paying you once a month in what's called lot rent, to rent a piece of dirt on that land so they can put their home and basically hook up to the utilities that you provide. But really, that's the slam dunk part of it, is the really hands-off low expense ratio that goes into mobile home parks, as opposed to apartment buildings where you do obviously own the entire building. And if there is a hole in the wall, or if there is a broken door, window, whatever, you are responsible to fix that, where in mobile home parks, that's not always the case. Mm-hmm. So it goes back to what we talked about earlier in the show, of like freeing up that time and really distancing yourself almost from those problems, where, an on-site manager who lives within the park, he probably could cover, 50, 60 pad park, because really there isn't a whole lot of maintenance going on from a home point of view and stuff like that. But that's really, if I could sum it up, kind of the sticking point of mobile home parks, and what makes mobile home park investing such a niche and super unique, is that concept of what's called land lease. So something really interesting about the industry. So yeah.
The other thing too that I like very much about it is that there's a lot of flexibility.
Yeah.
So most of them it's they really leasing the lot, but sometimes the property owner also owns some of the mobile home and
Yeah,
rents
it's
the
true.
mobile home. So that's another option. Not all of them, maybe they own 1, 2, 5, 10, and then they lease them and they can make more money off of that in terms of rent. There's also free lots that they can, then they can just go and put the new mobile home in there and get
Yep.
that something. And then there was also, if, so a few of these properties, there's still space. They still have space available that's undeveloped. So there's no electricity, plumbing, sewage there yet, but it's space, land that's available to expand on. So if you're doing a very good job and then all of a sudden you need more space, you can develop some extra lot, extra mobile home lot to and increase your rent. So that's another thing too that I really like about that is you have a lot of flexibilities, a lot of ways to grow the business. And ultimately, I mean, some of these mobile home communities that I've seen is, I mean, they're right here. I mean, I'm in LA, and there's one right here, a mobile home in Manhattan Beach, and one in Hermosa Beach, actually, and like close to the beach,
Yeah.
close to LA, and and they're just like mobile homes, and the community looks very nice. But I can imagine that 20 years down the road, maybe this is say, well, screw the mobile home park. Now we're going to build an apartment building or a hotel. You own a very significant piece of real estate
Sure.
that you can exit in a very, very profitable way, potentially.
Yeah, a great example of what you're describing, a park that I would say is in the pathway of development or
Yeah.
whatnot, or it's just, as you said, the exit for further development is just a phenomenal piece of real estate. The dirt itself is
Yeah.
probably worth more than the mobile home park is and
Yeah.
the money it generates. But no, that's an awesome example of some of the parks out by you for sure.
Yeah. Yeah. So, and how does the financing for that work? Like, how were you able to build your what they call a capital stack on this for this particular deal? Is this
Yeah. So
something
this
that you go ahead?
Yes. So for this particular deal, it's an interesting concept where it's an out of state owner, really laissez-faire, kind of hands off, who is super motivated just to get rid of this property. So it was actually a combination of seller financing,
Okay,
where
good.
the owner is going to hold the mortgage, and then he already has a mortgage on the property. So it's going to be a combination of loan assumption and seller financing.
Oh,
So
wow.
so we'll go 20% down, and then the remainder will be a combination of that loan assumption and seller financing. And the seller financing that we got for the deal is going to be 4% for a 20-year amortization. So
Oh, wow. Very good.
pretty good deal to borrow money at that rate
Yeah.
from the seller himself. So
Yeah.
but we see that case really a lot in mobile home parks where it is kind of a baby boomer owner who's owned this property for decades. And,
Yeah.
unfortunately in this situation, his children don't want to run the park. He has really no one to turn it over to.
Yeah.
And I was able to source it like that. And he's motivated enough to hold the mortgage for us at a pretty awesome interest rate. So,
Yeah.
but that's the financing solution for this deal. Probably got pretty lucky. First commercial deal, seller financing and loan assumption, but I think it's going to work out really well.
Well, yeah, I think this is great because I think a lot of people are wondering, kind of like, oh, hey, how do I get a deal? 140 units or 140 mobile homes. I can't afford that. Well, I don't want to listen to that. But there are creative ways to organize your financing, organize your capital stack to do that. And even the 20%, I mean, if you didn't have that 20%, get other people's money, get a private money lender and stuff like that, and get that in the books. If you have the room in terms of your cap rate to pay for all that, to pay for the seller financing and to pay for your PML. I mean, this is great. This is infinite return. You're getting cash flow and everything gets paid. So it's fantastic.
Yeah, there's nothing better than non-recourse debt. I don't know if you think differently, but another great advantage of seller financing. So.
Yeah. So this is so I like that. It's a very creative way of doing it, and then also at that. So you're right. I mean, a lot of the boomers, the baby boomers, if they have a piece of property that is time consuming to manage or it's a headache for them, they would welcome, to get rid of the property. The problem is that they don't want to sell it either, because they don't want to pay capital gains tax. Imagine they've owned that for 30 years, and the amount of capital gains tax they're going to pay on that is going to be unbelievable. They don't want to do a 1031 because they want to have the stream of income. So you coming in and do seller financing is really solving a very good problem for them. Now you're converting their asset, their equity, into a stream of income, which is what they want when they're at retirement. So
yeah, absolutely. I mean, they're still getting thank you. They're still getting that lump sum, like you said, at the 20%. So they're still getting a decent paycheck, but they're also, as you said, they're getting that monthly payment every month. So yeah.
And the other advantage too is that they could also consider that when they're reporting that in taxes, it's not really selling. It's kind of like, what is that? I forget what it's called now, but it's kind of like, it's kind of like amortizing the sale over a long period of time. So they're not capitalizing the gains every year. It's kind of like I forget what it's called, but it's kind of sale over a period of time, so that they don't have to pay capital gains tax at the beginning. So that's the other advantage of that. So what's next for you? I mean, you're just getting started here, and you're having already a big portfolio, lots of success. So what's the next goal?
Yeah, the next goal, man, I don't know. The next goal is the sky. The sky's the limit here. Once we get this one across the finish line, something that I've never done that's definitely on the 12-month goal list is once I have this commercial property, within my portfolio, it'll be to start doing syndications and start raising capital to do bigger deals. What I'm excited the most is getting this one across the finish line. I think that's really gonna, create a track record of like, hey, taking down deals of this size of, 100 plus units or whatnot. But I'm really excited for the potential of the concept of raising capital and stuff like that, and really start deep diving into that world. I really like how this first deal is just a joint venture, because I think it allows me, especially at this stage in my career, to become an expert at, asset management of a commercial property, owning a commercial property, the process, returns and stuff like that. I mean, I really want to make sure I'm an expert at that before I go anywhere near touching anyone else's money. So that's kind of the goal here, is really to get this one across the finish line, become an expert at that. And then here within 12 months, where I'm going to start raising capital, and I'm going to start doing bigger and bigger deals. So
well, sounds very good. Well, we'll keep an eye on that. Maybe you're gonna have to come back and tell us about your syndication deal when that's ready.
Yeah, for sure.
So Jesse, before we wrap it up, anything else you want to add? A book, movie deal that you're going to be on? You're going to be on Broadway or something? I don't know. A mission somewhere?
I'm terrible at dancing. I'm terrible at singing. I'm terrible at, you already hit it on, and I hit on it already, but if I could just, hit one more thing to your listeners. And again, I made the joke about it, but it was true. In November of 2020, I didn't know what a cap rate was. And, I networked my ass off, and I read every book, and I hit every podcast, and I got on phone calls, with subject matter experts like yourself, and I picked your brain and whatnot. And it's like, hey man, 6 months later, I'm here. Like, this is possible for those guys out there who are worried about, starting too small, or man, I don't think I can make that jump to commercial real estate. Like, let me be the proof that it is possible. And you got to be willing to put in the work though. For sure. I mean, I'm coming home from the W-2 job every day, and I'm reading books, I'm doing podcasts, I'm banging the phones, I'm cold calling, direct mailing. So, but if I could, hit, one last thing to your listeners, it would be something along those lines, that it's more than possible to bridge that gap, and you just got to be willing to put in the work. So.
Yeah, putting the work and then taking action. I think there's a lot of people that are kind of like sitting on the sideline, and then they just kind of find an excuse to say, well, so the real estate market is at the peak. I'm just going to wait for it to go down. And then when it's down, they say, well, I think it's going to go down further. And then we start going up again and say, oh, I missed it. I'm going to wait for the next down. And then 20 years down the road, it's like they still haven't invested because they're waiting for the right moment. It's always a good time to invest. in real estate, especially because you're in control of the asset. And what you're doing is the duplex and the fourplex that you've bought, you bought that at a specific price when it was making $2,000 in revenue. And then, a year later, you're generating $4,000 of revenue per month. So you've already increased tremendously that value of the property. So you're making it happen. The increase in value is making it happen. And this is why it's important for people to realize that it's always a good time to invest in real estate. If you're going to do value add, if you're going to do what you're doing here, like a transformation with student housing, same thing with mobile home, you're making things happen. You're increasing the value beyond what you bought it for. So that's it. This is the key answer. Take action, get in there, make it happen. It's always a good time to invest in real estate.
Absolutely.
So,
yeah.
On that note, Jesse, it was a pleasure speaking with you. We'll talk to you again when you have your syndication ready and you want to talk about it. And in the meantime, we'll wrap it up. Thank you for your time.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.